Hey everyone, this is John with Simpler Trading, and today I want to talk about the tick indicator. So for today, we're going to look at a 5-minute chart of the SPX and a 2-minute chart of the SPX, and we're going to look at two of the tick tools here. We're going to look at the NYSE tick tool, that's at the top, and at the bottom is the Mag 7 tick tool. Now, the extremes on both of these will typically be the same. You'll get the extremes on both. The difference will be on some of the, what I call the perpetual and the persistence, show up a little bit differently. And so a question will come up is, which time frame do you prefer? And so for big lasting moves, I absolutely prefer the 5-minute. And then for seeing when something's done, I like to watch the 2-minute. Okay, so what do I mean by that? So this morning on the SPX, we got a gap down. So it's selling off, selling off, selling off. And you can see we've got extreme, this is a sign of extreme selling when you got both of these Christmas tree lights lighting up together. So you never want to fight that, meaning like you don't buy the dip during that time. However, when it dries up, and you can see there, on the 2-minute and the 5-minute, it dries up about the same time, a little bit faster here. But when it dries up, that's the sign where at the very least, if you're trading like 0 DTE, you could sell an at-the-money put credit spread. If you wanted to buy an out-of-the-money call, you could. The main thing here, what this is telling us, is that the persistent and extreme selling is driving up. And at that point, typically what you're looking for is that the market just stops going down. You're not really sure if it's going to bounce like this at the moment, but what happens is that when the selling drives up, you just get some bounces. So selling the put credit spread is kind of the safer way to go. A lot of people are enamored with, okay, I want to buy that out of the money call. That's great, I get it. But for every call you buy, if you instead sold like say 3 at the money put credit spreads, you'll end up making about the same amount of money and your risk reward is the same. And the bonus is that if for some reason it just went sideways, you'd still make money on the put credit spread. Okay, I'm fine with, you could do both too. Now, then what you're trying to do is just decipher, okay, is there a little bit more to go here? And what's interesting on this is that if you're looking at the ticks here, we're like, okay, we're not really getting anything extreme on either one of these on the NYSE. It's like, okay, so this isn't really even helping us at all, right? But again, on the 5-minute, if you go down and look at the Mag 7, the Mag 7 has extreme buying here. And of course, the Mag 7 makes up like 30% of the indexes, right? And so even though the NYSE in general is not participating, you're getting mad buying in the Mag 7. And even though you had stocks that were down on the day in the Mag 7, they were well up off their lows, okay? And with Google actually closing up near its highs. So that added the fuel to the fire there. Then what gets interesting here is we start to consolidate. What are we seeing again? Now we're seeing more Mag 7 buying come in, and this time we're seeing the broader averages participate. And this was the huge move later in the session where you just, everybody jumped in. And then you got sideways, and then toward the end of the day, of course, this is just steady buying. And then you got kind of the tweet flush. And you can see again that tweet flush first shows up in the Mag 7. So anyway, very useful tool if you're day trading and you're doing S&P futures or SPY or QQQ. And of course, 0 DTE. We also, and also on the NDX, I like to look at the specific NDX ticks because it's going to be a little different. You're going to get a little bit different reading on those, and doing it that way. All right. So I'm going to finish up we got our live class tomorrow, October 15th. For those of you that are in it, I'll see you there bright and early in the morning. If you're not there, there should be. If you're not in it and you want to join, there should be a link for that. All right, you guys have a good one. See you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.